NNN properties carry one of the strongest corporate credit ratings in all of commercial real estate, S&P A+, from JP Morgan Chase, the largest bank in America. When you're buying a Chase NNN ground lease, you're collecting rent from a company with $3.9 trillion in assets on a prime signalized intersection. Let me walk you through exactly what that investment looks like. Chase NNN properties trade at 4.5% to 5.25% cap rates, among the tightest in the entire NNN category, reflecting the A+ credit rating. Buildings are 10,600 to 4,800 square feet, small by most NNN standards, on 0.65 to 1 acre lots. Entry prices run $3 million to $6 million. Lease terms are 15 to 20 years with multiple 5-year renewal options. The corporate guarantee comes from JP Morgan Chase Bank NA, S&P A+, Moody's AA2. These are among the strongest investment grade ratings available in any NNN asset class. Period. Drive-through capability is standard on new Chase branch locations. If your primary investment objective is income certainty, not income maximization, Chase Bank NNN is as close to that as you can get in commercial real estate. You're holding a ground lease from the largest bank in America with a credit rating most corporations can't achieve. Ground lease structure means zero building risk. Chase owns and maintains the branch building, you own the land. This is a fundamentally different risk profile than owning a building with a tenant. Your exposure is essentially just interest rate risk and the possibility that JP Morgan Chase stops paying rent, which would require a scenario so catastrophic that the entire financial system would be in question. For capital preservation-oriented investors, this is a core holding. Chase deals are almost universally ground leases. JP Morgan Chase prefers to own its branch improvements on a long-term corporate guaranteed land lease. Typical structure: 15 to 20-year initial term, multiple 5-year options, rent bumps of 10% every 5 years, absolute NNN to the land. When the lease terminates, building improvements typically revert to the landowner, though that's potentially decades away. Ground lease means you're holding land, not a depreciable building. Work with your CPA on the tax implications of this structure before acquiring. 4 considerations for Chase NNN. First, the cap rates are very tight. 4.5% to 5.25% means you're buying safety, not yield. If you need 6% plus current returns, this is the wrong category. Second, the ground lease structure limits your depreciation benefits since land isn't depreciable. Consult your CPA, especially if depreciation is important to your tax strategy. Third, the broader bank branch consolidation trend is worth monitoring. Banks across the industry have been closing branches and consolidating to fewer, larger locations. Verify that the specific Chase location you're buying is a strategic branch, high traffic area, affluent or growing demographics, not a candidate for future consolidation. Fourth, most of the best Chase ground lease locations are already held by institutional owners. When one hits the market, understand the seller's motivation. Chase Bank NNN is the definition of defensive income in commercial real estate: maximum credit quality, minimum landlord responsibility. I'm Ryan Solberg with MaxLife Commercial. If you're building a conservative income portfolio and want to evaluate Chase NNN opportunities in Florida, reach out. Visit maxlifedevelopment.com or call 321-586-2121.